What's going on, guys? In this episode of Should I Invest, we're going to be talking about whether or not Roblox is a good investment for long term, considering it's been consolidating in this range for a very long time now. And is it going to break out? We'll need to dive into some of the financials using our MarketSurge tool, which is something that I have opened right here on the screen. And we're going to plug it into our handy dandy Excel sheet and see if it's the right move. All right. So without further ado, let's go ahead and jump right into it. I have my handy dandy Excel sheet. MarketSmith tool is open. So let's go ahead and get started. So we're going to go ahead and plug in Roblox here. Right away, negative EPS. So PE is not going to show up and immediately puts it at a disadvantage. All right. So two criteria is already not meeting. Return on equity is probably going to be an NA as well because of the PE. So let's go ahead and plug that in. Now what we can do is go ahead and pull up Yahoo Finance just to look at a little bit of Roblox's financials. To do that, we're going to go ahead and look at financials here. And we're going to look at total debt to total assets. All right, so I'm going to bring that here, make it a little bit smaller so we can see both pages. All right, perfect. So total debt to total asset. Okay, so we're going to come down here. We're going to look at balance sheet. We're going to look at total debt, right? So total liabilities right here. Let's go ahead and plug that in. Boom. Let's go ahead and look at total assets. I'm going to plug that in. Boom. So 1 to 1, right? So if they sell all their assets, they can pay off their total debts, okay? Usually you want to see a bigger figure than that, but it is a 1 to 1, which is a positive number, which we're looking for. Now let's look at total current debt and current assets. All right, so we're going to come down, current liabilities. We're going to plug that right here. All right, and then we're going to go to current assets. Again, looks like it's going to be a 1 to 1. Perfect. Now let's look at operating income and operating loss. All right, so we're going to come down, total operating income right here. Plug that in there, and then obviously we have total revenue. Let's go ahead and plug that in there. So it doesn't look like we're going to get a positive number here, but it's not the greatest as well, minus 45. All right, so next thing we want to look at is cash flow. Is cash flow at least increasing or decreasing, right? So from 2020, 400, 500, minus 58, and 124. So considering what kind of took place between 2021 and 2022, leading into 2023, they have seen a little bit of an increase. But at this point, I really don't think this is going to make a big difference, even if we put it on increase. And owned by management, we're going to get that by looking at the MarketSmith tool here. Right to the left, we have owned by management. We have 21%, so quite heavy here with management. Similar to Tesla. Tesla has 21%. So on the upper side of the scale here. But next thing we want to look at is funds. Is our fund ownership at least increasing or decreasing? And when we're looking at fund ownership here, you can see from March 2023 till March 2024, although it hasn't really dropped, they are still kind of being added. December 2023, March 2024. So we have a little bit of addition here as well. Okay. Either way, this is going to give us a fail simply because we have quite a bit of things on the red side, right? So income statement does not balance. The first three right off the bat are negative due to the EPS. But let's look at the charts and see if there's something we can take into consideration, right? So you can see it's kind of been stuck in this range. Obviously, during the peak back in 2021, it shot towards 140. I think one thing that we could do is look for maybe a dollar cost average anywhere between this 44 to 30 level. Seems to be a good area where for the last 2 years they've accumulated or consolidated here. And one good earnings report or a positive EPS, if you guys dig in more into the financials and what their outlook is for the next few quarters, this could pop this thing back up. And from 50 to 100, it's about 100% gain there on your capital, right? So not much resistance once you get over that big psychological 50 level, but it does look like something that has been consolidating for a long time. And you do want to see these, I guess, downtrends and then consolidations and rounding bottoms before they kind of break back out and start the next cycle. All right, so maybe something you guys look at a little bit more detail, but just by looking at it in the very quick spectrum of things, the balance sheets and the financials currently are not the best looking thing, but it is a little bit of a growth name, and that is why. So I hope you guys did find value in this. If you did, smash that like button, subscribe, and we'll catch you on the next one.